Hello there, folks. Welcome into today's video. So this morning I just wanted to go through Fubo and just spend some time on Fubo. I'm going to take you through my ultra bearish case on Fubo, my bear case on Fubo, my bull case on Fubo, my base case, which is my expected probabilities of Fubo for the next few years, and we'll go through my ultra bullish case on this stock as well. So it's just all focus on Fubo. Even if you don't really care about Fubo stock, I think you can learn a little bit from today in terms of how I go through and projecting out numbers, why I do it, those sorts of things, how I think about this process. Because in order to make an investment in stock, you've got to be able to at least somewhat confidently project out future numbers and say, okay, I think if things go bad, here's where we're likely headed. If things go really well, and I'm not just talking about a stock price, like, oh, I think that's the stock price. I'm talking about revenue. I'm talking about net income. I'm talking about net income margin, okay? Very important things. So appreciate y'all joining me as always. Thanks so much for being here, folks. Thank you for being subscribed to the channel. I think we're at 37,100 plus subscribers now, so appreciate y'all. Before I get into my ultra bearish case, bear case, base case, bull case, and ultra bullish case, I did want to draw your guys' attention to this. Fubo's basically Cantor came out with a overweight rating on Fubo. Cantor Fitzgerald began coverage of FuboTV with an overweight rating and $5 price target. Analysts said that the internet television streaming platform is one of the best pure ways to play cord cutting in the associated shift of advertising dollars from linear TV to connected TV or CTV. The analysts think the market is overlooking Fubo's TV's growing importance in the TV network owners as traditional pay TV continues to lose subscribers. The company's ability to pass through additional price increases to its subscriber base. Yes, I agree with that. In addition, the market is also overlooking upside to high margin advertising revenue as ad spend on CTV still lags behind share of screen time for consumers spend on CTV 100%. The advertising dollars are lagging big time. That will be a big game of catch up, let's just call it, over the next several years. Fubo's ability to generate positive adjusted EBITDA and free cash flow by 2025. The analyst estimates that Fubo can grow revenue at about a 14% compound annual growth rate, CAGR, from 2023 to 2028, and can generate free cash flow margins of about 7.4% by 2028. So, that's a bright start in regards to Fubo, right? It'll be interesting if Fubo hits $5 very shortly, if this analyst ups their price target to, let's say, $7, $9, especially if Fubo comes through with better earnings than maybe are expected out there, okay? So already, guys, let's get into the cases. By the way, I put together a full-scale how I plan to invest video in 2024 for you guys. It's about a 45-minute video. If you want access to that, before today's video is over, check out the pinned comment down there, enter in your email. I'll email it over tonight or tomorrow or something like that, okay? Alrighty, guys, so let's get into this. Here's the ultra bearish case for Fubo. We'll start out in the worst case scenario and we'll go all the way to best case scenario, okay? 2024 through 2028, obviously we're about to enter 2024, so it's a good time to, kind of start projecting out, okay? So in my ultra bearish case, this would be extremely disappointing. 7% revenue growth on average for the next several years. Now this would be far lower than somebody like Cantor Fitzgerald, far lower than my expectations for my base case. This would be extremely disappointing. This would mean, Fubo just has a lot of trouble growing new subscribers, going up on subscribers, all those sorts of things, and they just have trouble growing, right? And so this would put them only at, let's call it less than $2 billion of revenue in 2028, which would be just insanely disappointing, okay? The ultra bear case assumes Fubo continues to attract new subscribers and new advertisers at a very slow rate. Ultra bear case assumes Fubo customers and advertisers will spend hardly more over the years. Ultra bear case assumes economy is bad over the coming years. So, in the ultra bearish case, I had them taking a $275 million loss in 2024, which would not be very impressive. Let's call it a number for the company. It would be pretty sad, okay, if they had a $275 million loss next year. But that's the projection there. The following year, a net loss of $175 million, so still not making very much progress. The following year, 2026, which, in my other cases, my base case at least, I had them being profitable in 2026. This would be so disappointing. Take another $100 million loss in 2026, then get to break even finally 2027, and then 2028 finally start eking out small profit of $30 million net income, okay? That would be really, really, really disappointing, okay? Net income growth assumes Fubo will continue to find no cost savings in the business while remaining disciplined with spending. Fubo has shown strides to bring down losses. This assumes 2024, 2025, and 2026 are still rough. Fubo will grow by attracting new customers, upselling current customers, raising prices, selling more ad spots, and raising ad rates. So in this scenario, keep in mind today, Fubo's around, let's call it, they're around $1 billion market cap. They might be slightly under $1 billion market cap, but let's just call it $1 billion for the rest of this video, okay? So $1 billion market cap today, that would put me all the way in 2028. I don't even know if I would have made money in the stock. It would basically be still probably a $3 or $4 stock, assuming they never got bought out by anybody and assuming all this came true. Okay, this is extremely, extremely bearish. Now, how probable do I think that is? Extremely unlikely. Extremely unlikely, but it is a scenario I have to plan for. The ultra bull case and ultra bear case, those are usually less than 10% probabilities, I would call it. They are possibilities, okay? Kind of like worst case scenarios. So, yeah, and this would drain all their cash, which means they would have to dilute shareholder value again. There's risk of BK. That's just very, very bad dynamic there, okay? All right, guys, next one up here. Let's get into my bearish case for FuboTV, okay? This is my bear case for this stock here. So, in my bear case, I have them doing 12% revenue growth a year for the next several years. Once again, that would be less than even a Cantor Fitzgerald. That would be less than I'm expecting. So it would be pretty disappointing. So let's say they do about $1.6 billion of revenue in 2024. That would put them at about $2.5 billion of revenue in 2028. Okay. Bear case assumes Fubo continues to attract new subscribers and new advertisers at a slow rate. Bear case assumes Fubo customers and advertisers will spend slightly more over the years. Bear case assumes economy is decent over the years. So in this scenario, I had them taking a $250 million loss in 2024. Obviously much bigger than I'm expecting them to take in 2024, but that's the number, okay? $95 million net loss again in 2025, which should be a year where they're starting to get close to break even. So that would be another big disappointing number. Then 2026, not even a profit, just break even that particular year. Then 2027, starting to eke out small gains, net income of $25 million, which would only put them at a net income margin of 1.1% in 2027. And then 2028, $37,500,000 of net income. And that would be about 50% growth over the previous year. That would put them only at a net income margin of 1.49% in 2028. Net income growth assumes Fubo will continue to find no cost savings in the business while remaining disciplined with spending. Fubo is showing great strides in bringing down losses. This assumes 2024 and 2025 are still rough. Yeah. Nearly $350 million in losses. Yeah, that's rough. Fubo will grow by attracting new customers, upselling current customers, raising prices, selling more ad spots, and raising ad rates. Now, this net income margin number, this is important because if I was to look at, let's say a Dish Network kind of in their prime, Dish Network was commanding net income margins of kind of, let's call it in the 6 to 7% range in the prime days of their satellite business. I'll keep in mind, Dish Network had drivers, they had people that had to install the satellite dishes and all this equipment and infrastructure and things like that. So it was a bit of let's just call it different business model. I think Fubo should be able to grow, let's call it a lot more profitable over the coming years. So this case assumes that they're not even in the same league as a Dish Network was in their prime of their business, right? And then if I look at the prime of Fubo should really be probably like 2027 through about, I would say, 2037. That should be the prime of Fubo's business, assuming they never launch any other game-changing products in the future. So anyways, really, really poor numbers. When you're in the 1% range for net income margin years out, that's pretty bearish overall, okay? Alrighty, so now let's go get in my base case here. This is my most probable scenario I foresee for the company, okay? So here's where I'm at for my base case for the company, right? And then we'll get to the bull case and the ultra bull case, and things will get really fun. So in my base case for this company, and then doing $1.7 billion in 2024, which is, it is a little bit above where analysts are at. Analysts right now are in the 1.6, I think 1.62 range for revenue expectations for 2024. I think it would be a little stronger growth than people are expecting. So I think they'll do about $1.7 billion. And then I think they'll do a compounded annual growth rate of about 18%. I feel pretty comfortable with that, seeing how many new subscribers Fubo tracks, seeing how much room they have to play catch up in the advertising side of their business, seeing how they're able to go up on customers, upsell customers, things like that, okay? So 18%, I feel pretty comfortable, okay? Base case assumes Fubo continues to attract new subscribers and new advertisers. Base case assumes Fubo customers and advertisers will spend slightly more over the years. Base case assumes economy is decent over the years, which whenever you're forming your base case, you should assume a decent economy. That does not mean a booming economy. That does not mean an end of the world recession economy. Just decent over the coming years. That's the best way, in my opinion, to project out things. Don't expect freak scenarios of massive recessions or massive booming markets or something like that. Okay. So in this scenario, I have them still taking actually a big loss next year of $200 million. I do think there's a potential they could beat that number, but you know, I want to play a little safer. And so $200 million would be a pretty poor number, but that's what I have in there for them taking a $200 million loss in 2024. 2025, I see a big improvement down to a loss of $50 million, so getting closer to break even. 2026, I see them flipping that from a $50 million loss to a $50 million positive number, right? Keep in mind that revenue is going to continue to pile up for the company, but if their revenue continues to pile up, you know they're going to continue to spend on marketing and infrastructure as well, right? Then I have them doing about a 95% growth rate over the coming years. You might think that's really high. That, you know, when companies are at the infant stage of profitability, that's not high at all. You know, many times when companies are reaching that infant stage of profitability, they're growing their net income 50%, 100%, sometimes several 100%, sometimes thousands of percent. When they're at that infant stage of like they just flipped to profitability, because it's actually pretty easy to scale that over the coming years. Okay. I have them doing 97, a little under, let's just call it a little under $100 million in net income in 2027. And then I have them doing $190 million of net income in 2028. And that would put them right at about $3.3 billion of revenue in 2028, okay? Which would put them a little under where Dish Network was at the prime of their business, of their satellite business, when they were really focused on that. That would put them at a net income margin of 5.7%. So I still don't even have them getting to Dish Network's kind of prime of business net income margin, okay? So it's just a little food for thought in regards to that. There is obviously potential to beat that, but this is where I'm at for my base case, right? Net income growth assumes Fubo will continue to find cost savings in the business while remaining disciplined with spending. Fubo has shown great strides in bringing down losses. I assume that will continue. Fubo will grow by attracting new customers, upselling current customers, raising prices, selling more ad spots, and raising ad rates. So in this scenario, right, if we look out 2028, now the question is, what are you willing to pay for a company that's growing top line revenue a little less than 20% and growing bottom line net income close to 100%? What are you willing to pay for a company like that? You're usually willing to pay 50 to 100 forward PE on a stock like that if they're growing at those sorts of rates, especially that bottom line rate, right? Now, I don't even go up to 100 PE. I go up to 50. That's my max level, okay? So assuming they're growing at those sorts of rates and growing at those sorts of clips, the company could be commanding, I mean, at the low end, this would be kind of silly if it was only trading at a 30 PE, considering the growth rates I expect the company to be having on that bottom line. It doesn't make sense for them only to have a 30, but let's say hypothetically it's a 30. That'd put them at about a $5.7 billion market cap. Yeah, you can see why I invested in this stock, okay? You know, it's why it's a spec stock of mine, because if what I think is going to play out for this company, I mean, there's a lot of upside here, and I mean a lot of upside over the next several years if this, you know, plays out. So yeah, just under $6 billion market cap in let's call it 2028, right? Now keep in mind they could do share dilution. I don't really see them needing to do that over these next few years. They should have enough capital, and they've said they've had enough capital to not do any share dilution. They could also do share buybacks over the coming years. I don't really plan on them doing any big share buybacks over this next 5 years, and the reason being is they're just going to start really boosting up their net income substantially toward the end of the cycle, right? So if if I was thinking share buybacks, I would think probably past 2028, right? If somebody was willing to pay a 40p, which is still insanely low considering the growth rates this company will likely have, and that bottom line, 7.6 billion and a 50 PE, you're at $9.5 billion market cap for this company. And once again, today it's about $1 billion on the stock, right? So that's my base case for the stock. This is what I'm personally expecting, right? And that's why I'm willing to take the risk in this stock, right? And it comes with a lot of risk. I ran you through that ultra bearish case, right? I ran you through the bear case. There's no doubt the stock comes with a lot of risk. And the reason I'm willing to risk at least a little bit of capital in this one is because my base case says this stock has a tremendous amount of upside over the coming years as they bring down those losses in 24, bring them down substantially in 25, and then get to profitability in 2026. Okay, so that's my base case for Fubo. Now let's go ahead, let's get into the bull case and then the ultra bullish case, which are whole other levels. Okay, alrighty, so my bull case for Fubo here, right? And remember, I never invest in a stock based upon my bull case or my ultra bullish case. This is just more for fun, of like, because sometimes things do go better than you ever expected. Good example of a stock like that for me is ELF, right? I'm up, roughly almost 2,000% on ELF. It's a good example of something that went way better than I ever expected. Tesla, I'm up, close to 1,000%. That went way better than I ever expected. So I don't want to invest based upon things that are supposed to be better than expected, but I like to kind of run some projections. Just what if it did go better than I expect, okay? So better than I expect would be 22% revenue CAGR for the next several years for the stock, the next 5 years. So in the bull case, I have them doing about $1.8 billion of revenue in 2024, getting to $2.2 billion in 2025, almost $2.7 billion of revenue in 2026, 2027, $3.2 billion, and then about $4 billion of revenue in 2028 in this scenario, right? Bull case assumes Fubo continues to attract new subscribers strongly and new advertisers. Bull case assumes Fubo customers and advertisers will spend modestly more over the years. Bull case assumes economy is decent over the years. In this scenario, I have them losing about $150 million net loss in 2024. I have them getting very close to break even in this scenario in 2025 with only a $25 million net loss. 2026, I have them getting to a $75 million profit. Then I have them hitting that 95% growth rate over the next couple of years coming out of that as far as net income growth. $146 million of net income in 2027 and $285 million of net income in 2028. Net income growth assumes Fubo will continue to find small cost savings in business while remaining disciplined with spending. Fubo has been making great strides in bringing down losses, and that trend should continue on in future years. Fubo has been able to show growth by attracting new customers, upselling current customers, raising prices for customers, showing more ads, and upping ad rates. So, in this bull case, I have them getting kind of to that range of where Dish Network was in the prime of their business, right? Let's call it 7%-ish net income margin, which is where Dish Network really was in the prime of their business. So in this scenario, you could say anywhere between about an $8.5 billion market cap and about a $14 billion market cap, somewhere in there, right? Which is tremendous upside. And so, exciting, right? Exciting. We'll see. I would call this scenario probably I'd call it about a 10% probability. About a 10% probability. I would say, if I had to guess, my base case is probably about a 60% probability. I would say the bear case is probably about a 10% probability. The bull case about a 10% probability. And, we could throw maybe 10% probabilities on the ultra bearish case and the bull case as well, the ultra bull case, somewhere around there roughly, okay? So the base case is always what I'm expecting. These are the outlier scenarios. Alrighty, so the last one up here, let's get in the ultra bullish case. Get ready to have your flapjacks flipped in this one. Holy smoke, is this ain't no dang joke, okay? So, the ultra bullish case. Wow. It's quite a situation here, okay, folks? So, in the ultra bullish case, I had them doing a 28% CAGR over the next 5 years. Revenue growth, okay? I have them doing about $1.9 billion of revenue in 2024 in my ultra bullish case, reaching to $2.4 billion in 25, $3.1 billion in 26, just under $4 billion in 2027, and $5.1 billion in 2028 in this scenario. Ultra bull case assumes Fubo continues to attract new subscribers and new advertisers. Ultra bull case assumes Fubo customers and advertisers will spend slightly more over the years. I would say more than slightly. I should have probably said a lot more. Ultra bull case assumes economy is decent over the years. So in this scenario, by the way, I still have them, even in my ultra bull case, still haven't taken a massive epic loss next year. $175 million net loss in 2024. Then I had them getting close to break even in 2025, but still taking a loss. Think about that. I still have them taking losses, even in my ultra bullish case, right? $20 million net loss in 2025. Then 2026, I have them flipping a profitability of about $100 million of net income in 2026, then getting up to $250 million of net income in 2027. Keep in mind, as you grow that revenue, I mean, you're going to really start to see some huge numbers start to hit the bottom line if you're really growing revenue like that, right? And then I have them getting up to $625 million of net income in 2028. Net income growth assumes Fubo will continue to find cost savings in the business while remaining disciplined with spending. Fubo has shown strides in bringing down losses, and I assume that will continue. Fubo has grown by attracting new subscribers, upselling current customers, raising prices, selling more ad spots, and raising ad rates, right? And I mean, if they're starting to get to these sorts of numbers, I mean, you know, every company that's an advertiser out there is going to need to start to partner with Fubo and run ads on their platform because it'll just be at such massive critical scale at that moment in time, right? Now, in this scenario, in this scenario, now keep in mind, if they're growing their bottom line 150% and their top line 28%, they're going to be commanding 100 plus forward PE. But once again, my scenarios only go up to 50 max. So in this scenario, the company would be trading somewhere between, let's call it about a $19 billion market cap and about a $31 billion market cap for the company in this particular scenario. So that's why I call it my ultra bull case, right? So yeah, you know, this is why I've taken a little bit of risk in this stock, because I look at it and I say, if this stock goes the way I think it can go, it's such a massive game changer for any portfolio it's in, right? I mean, you know, that's just one of those that, you know, it's an elf type opportunity, right? It's an elf type opportunity, so that's why I'm like, I'm willing to take that risk. Maybe it's not, right? Maybe it's a TTCF type opportunity and they go BK. But I am seeing the company consistently make progress on the bottom line. I'm seeing them consistently make progress with their gross profit. And so looking at the financial statements, things are starting to roll right. And it's showing no signs of stopping to bring in new subscribers. So if this trend continues of bring down losses in 2024, I think the base case is going to look more and more realistic. And you'll see more and more like people jump onto the stock, and you'll see more and more Wall Streeters especially jump onto the stock. And so that's kind of my 2 cents in regards to this one, and those are my base cases, bear cases, the whole thing, okay? Appreciate y'all joining me as always. Hope you got some real good value out of this video here today. If you want some more value, check out the pinned comment down there. It's a 45-minute video I recorded for you guys this week on how I plan to invest in 2024 across the board with everything going on, with everybody talking about everything they're talking about. Man, it's a lot, right? And so yeah, that's a really good video I put together for you guys. Pin comment down there. I can email it over tonight. Much love as always, and have a great day.